What's up? It's Ben here. Dividend investing is good. You put some money in and a couple months later, you get some money back. Now, if you put more, you get more money back. Now, you're not going to double your money in a year just by doing this. It takes time, like a lot of time. Sometimes when we're looking at stocks, we see a section that says dividend yield or just yield, either with a number percentage or no number percentage. And if it happens to have a number there, that means that they are paying a dividend. And that is the annual percentage that the company is paying to its investor, and it's calculated by the amount of dividend that they're paying divided by the stock price. And that's how you get the dividend yield. Normally for beginners, you would just assume, oh, a high dividend yield is always better than something that pays a low dividend or no dividend, which is wrong to think that way. You can have a tech stock like Amazon, Netflix, or Tesla paying no dividends, but the price per share are always increasing and increasing, putting more money into investors' pocket when they sell. And those are normally growth stocks. Dividend investing is basically a long-term play. If you're investing in dividend stocks, you're most likely seeking for a source of passive income. Now, that begs the question, what is a good dividend yield that we should be looking for? In my opinion, if you're not looking to cash out any of your stocks anytime soon, you want to be looking at something around at least a 2% dividend yield. The reason for this is because inflation hovers around the 2% per year, and you want to at least keep up with inflation. Granted, you can still have capital appreciation, which is totally fine, but we are looking for passive income here. Now, you might be thinking, man, 2% is somewhat too low if you're just keeping up with inflation. So now you want to only look for stocks that have been increasing their dividend annually to further protect against inflation, because growing dividend stocks makes them more valuable for investors, therefore increasing their price. Now that you have a low limit, let's look at the high limit. Would you like a 50% dividend yield? It sounds great, right? Only if it can sustain itself. For stocks who have crazy high dividend yields, you're basically looking at penny stocks. Most likely they're penny stocks, and you can check it out yourself. Penny stocks are usually below $5 per share, and they are a risky asset because they have a lot of volatility. You could buy in, but overnight a stock's price could just plummet, losing everything you put in. They are never a long-term play. For the high limit, where you want to be is below about a 10% dividend yield, because if a stock offers at least a 10% dividend yield, you're most likely not going to gain a 10% return each year because their stock price will most likely fall. You can check it out yourself, look at historical data, and find stocks that at least pay a 10% dividend yield and check out their historical prices. Have they declined? Most likely they have, because it's hard to grow if you keep paying out dividends to your investors, or eventually they'll have to cut their dividends. So now that we know that, it's okay to shy away from stocks that is below a 2% dividend yield and above a 10% dividend yield. That leaves us with a range of 2% to 10%. Now, you can't just blindly go in and pick any stocks in that range and expect it to be a good pick. Most likely you're going to have to look at their fundamentals like strong cash flow, strong earnings, a low debt to equity ratio, and much more. Typically, in my opinion, the best range would be 3 to 6%. This way, it's high enough to beat inflation and low enough to avoid any massive drops in the stock price or to avoid huge dividend cuts. Dividend cuts aren't good if you want that passive income. In my other videos, I show you my strategy, how I look for dividend stocks and also look for stable high dividend stocks as well. This way, you don't have to worry about companies' stock price tanking or having their dividend cuts. Feel free to check out those videos out if you like. If you like this video, make sure to give it a like and maybe consider subscribing for more content and to see what I'll be investing in my own personal account. I'll catch y'all later.